Hello guys, in this video I will try just to show a lot of beginners or intermediate or even advanced investors, those who hold for a company too much and these companies are not doing well. You don't need to go and dig for these companies. For me, I'm telling you, I will show you how to know if a company is losing money without going to balance sheet and financial of a company. And you tell me, how do you know? And how do you know how you don't go to a financial thing and you don't know? It's just because the price doesn't lie. When you see something in the chart, you understand that there is something wrong with this company. Okay? Now, I will give you two examples. They are still trading, but it might be they get delisted, it means taken from the exchange, or maybe they go bankrupt, or they have been, because if they are bankrupt, they will be taken from the exchange. And people who have these kind of stocks, they don't know because they don't see the chart and they don't understand what's going on. Okay? These two examples I have always given them to you in the past, but today I make just two. I want just to show you the chart and to see, because these stocks I have been trading them many years ago when they are strong, but when they begin to go into a downtrend, I left them. Okay? Because it's so dangerous when you are going long when the stock is in a downtrend. So let's go and see these two stocks. Okay? As you can see, we begin with Sears. Who doesn't know Sears? I don't know if you are in the United States of America, most of the time you know Sears, which is a retail store, department stores selling a lot of stuff. Okay? And it's very famous in America, but see the problem. How do you see the number today? It's $1.39. Now, when you see $1.39, you think that the stock it just have a downtrend, small downtrend. But let's give you the yearly. What did happen to Sears? Sears goes to $195.18 in 2007. 2007, the stock from $195, it goes to 98. So this year is the beginning of the collapse of this stock. Understand, $195.49. This is in the end of 2007. This is the year when we have the financial crisis of 2008. But this stock has begun its downtrend and its collapse 1 year before the market collapse. So it's not only what we call the crisis of 2008. But in these years, okay, 4, 5, 6, 7 is the bad, 8 is bad, and here is a good year. From 38 it goes to 83, so there is a trend, but this trend going down, and then we have a small trend 2 years, and then from 2014 this stock is losing money from, it was $51, now it is $1.39. You should understand this. So this is how the collapse. Now, why is that? You understand why is that? It's just because this company, when it loses money, it means it's not making any more. So the mutual fund, they know. So the mutual fund, they have left this company here when it was 195, it's going down. Most maybe of mutual fund they have left. So what is left is only the people who still own, because it is their company. It means the shareholders, the first who make this company working, those they stay. Because right now we have stores and maybe they are selling stores or something like that. So if you see this chart, you don't need to go to financial. For me, I don't care. Whenever I see a chart going like this, I understand that this has lost money and maybe it go bankrupt. If you can see the months also, you see the months, okay? It's a very, very long downtrend. Now, let's go to the daily. Because the daily, you don't see that much. If you go back, that's why I always tell my students, you should always see the back, what's going on. Okay? Now, let's go to another company, Giuseppini. Most of you guys know Giuseppini. It's a very famous company in the United States of America, and it's the same category of Sears. It sells clothes and appliances and a lot of stuff. It's all the same thing. And you can see it's $1.84. There's a gap down here. Okay, so let's go to the monthly, to the yearly. So Giuseppini is not the same as Sears. It has been going up from $11. It go until $78 for this year's. Okay, but this year in 98, it has a collapse of 3 years, as you can see. Collapse here, a downtrend in 3 years. Now, then we have 5 or 6 years. It was so strong. It's going, let's say, from here, from $8, it can go to $82. These years were the best years. Now, 2007, it is the same year that they collapsed, the same year as Sears. Giuseppini is the same because they have the same things that they sell, and they have the same model, and when they collapse all. You see, 2007 is before 2008, where everything collapsed. So understand that this company has problems before the collapse of the market in 2008. Then 3 years it goes good, and then now from $43, now it's $1.84. Okay? There is, I think, I will show you right now Target. No, not this one. I think it's this one. Yes. Now, Target, although it does the same thing, but you see that the company was going up, it go down a little bit. 3 years you are doing good, but this year it has done so good. From $66, it goes to $88. So it is doing so good. Now, I will tell you something about Target and the difference between Target, Giuseppini, and Sears. This has to do with something else. Okay? Now, before, in 2008, when the crisis began, some companies, they change something that makes them stay. Now, what is the thing that Target has done that makes it stay alive better than Giuseppini and Sears? Although Target was doing the same thing as JCPenney and Sears. It means they sell appliances, they sell clothes, they sell things. They do something, they understand something, and it is a big move for them. That's why they don't collapse. Could you tell me what is this thing? I'm telling you right now, don't bother yourself. You can search also if you find other reasons, but I will tell you what is the reason. Now, in 2008, where all the companies collapse, the companies after that years, 2008, it means 2009, 10, 11, 12, 13, until now, those companies that they have a grocery in the store, they make more money because the people, when they lost their jobs, the only thing that they think to buy is food. And this is something that happened in America here. There is a big change because the people, they have no money. They lost their houses, especially in 2008. So the problem for them is, the only problem they think about is just to eat. And you tell me, for example, oh, they have been eating before. What's the difference? Now, I will tell you the difference. People, they lose their jobs. Millions of houses are lost. They are not thinking to buy a fridge when they lose his house, or furniture when they lose their house, or to buy a lot of things that they don't need anymore. Target, because I was astonished at that time, I go to Target and to Walmart to shop, and at that time, I see something strange. I see they are making a grocery in Target. Target before, they have no grocery. It means vegetable, fruit, frozen food. It doesn't exist. It doesn't exist before in Target. And you, if you remember, you can just try to remember that Target before has no grocery. Now, when they make a big grocery, like Walmart, they have no problem. They make a very large grocery with all the same as Walmart, as the other thing. All the business start to make money. So Target saved itself by changing, by adaptation. Some other stores, JCPenney and Sears, they continue to do the same thing. They see their stock is going down. They are losing money, but they stay with the same. This is a stupid thing from their home office managers. It means executives and CEO. They see their companies are collapsing. They begin to sell stores because they don't make money, and they don't do nothing. I don't know what happened if JCPenney is sold to other thing, but still, the stock shows me everything. That's why I told you that there are things, especially price. For me, even if I invest in a company, if it doesn't go up in 1 year or two, I will sell it. I don't care what the people say. So if there is no money, there is no business. So try just to take my mindset that if you are in investment, long or short, you should try to think about your money and to protect your money. Okay? Not to stay with a loser. For example, let's say if you are with JCPenney or with Sears and you stay all these years, and each year you lose 10%, 5%, 10%, 10% until you have no money. It's your choice. So in the stock market, you should always protect your money and be with winners, never be with losers. Because a loser, when you stay with a loser, you know that it is a loser. So why you stay too much? Okay? I'm telling you, you don't need to be a professional economist to know Sears and JCPenney are losing money. This is stupid. For me, I have never seen their statement. I traded before when there is some trends, because the trends, the trend stays 1 month, 2 months, 6 months. When there is a trend, I am there. I see an opportunity to buy. I see that because I follow the price. But whenever something is dangerous and the stock is losing too much money, I will be out of it. And I didn't even do selling short for a long time, and I don't do that. Why is that? Because if the company go bankrupt, you can lose all your money that you put there. Understand that. This is something very, very important to understand. A company that it is bankrupt, you lost all your money. Now, when it is delisted, it means the exchange, because the JCPenney and Sears, I think either they will do a reverse split. It means a reverse split. It means if the stock is $1 or $2, they should combine five shares or 10 shares to make one share. For example, now the stock is $2. It can be 5 to 1. It can be let's say $10. Because the exchange, they have rules, and I think companies, when they reach a certain price, they will ask them either to do a reverse split, or they will take them out of the exchange, because they don't want a very, very big losers. They have rules. And I expect that because the price is going to $1 something, I expect that JCPenney and Sears, maybe they go bankrupt or they get delisted or whatever. So this is a real problem with these stocks. So the main thing I'm telling you always is look at the price and look what's going on to the price. Okay? So thank you very much for watching. Please, if you have other ideas, or other opinion, or you have another reason that I don't know, please just share with us. Thank you very much, and see you next time.